Hey everyone, happy December. Patrick Jackson here with this week's market update. Today is Thursday, December 1st, and it's about 12:30 on the West Coast. And mortgage rates have started out the month of December on a very positive note. According to that lender survey, the average 30-year conventional rate across the country is about 6.29% this afternoon, whereas last week when we were talking, we were at 6.64%. So the main reason for that big drop actually started yesterday. Fed Chair Powell gave a speech, and unlike normal, instead of having a negative effect on the markets, it actually had a really positive effect because he seemed to soften his tone a bit. He recognized that sounds like they'll have to slow down their rate hikes, that they don't want to overdo it and cause too many issues in the employment markets and things like that. So the markets reacted really positively, had a great day. And that fed into this morning when we got the Fed's favorite version of inflation, PCE. Those numbers in, and that came in about where it was expected, which was positive. So the one they like the most, like we've talked about, is the core, the blue line, which takes out food and energy costs. And so that was down to about 5%, 4.98. And the headline was down to about 6% at 6.02 off its high of 7 back in June. So inflation is on its way down, which is a really positive thing. Like we talked about in the past, inflation is the number one enemy of mortgage rates. So as this inflation comes down, we should see mortgage rates drop with it. One part of the reason we feel confident they'll keep dropping is shelter costs. So shelter costs lag in the indicator, and we see these are coming down. So the effect of them coming down hasn't fully shown up on the numbers yet, but rent costs and all that is a big part of these inflation numbers being up. So as this keeps coming down, as this gets reported and factored in those numbers, we should see that inflation number drop even more. And like we just said, that should make mortgage rates drop as well. And then a couple of things I want to share with you guys as far as, maybe why we should be more confident, things are going to go a little bit better this time as far as, a housing correction. And this has to do with, mortgage originations by credit score, basically loans my industry has done over the last, 20 years or so based on credit score. And going back to the early 2000s, you could see we did a lot more. The blue line is 620 and under. The yellow is 659 into 620. So a lot more loans with people with negative or bad credit scores, and a lot less with the higher ones. And as the laws changed and my industry got a little more strict, you could see how basically the 620 and below have almost gone completely away. And even the 620 to 659 have gone way down. And then we've really seen 760 and above explode. And that's just another reason to be confident where, that just basically says that borrowers, people that have taken out loans on houses, mortgages, have become better. They're better overall consumers. They have better credit scores. They pay their bills on time more. They don't default as much. And so that is good underlying data for us to be confident that as we go into this housing correction right now, these folks won't be underwater. They'll be able to pay their bills. And then one other one along the same lines is the number of new foreclosures and bankruptcies over that same time period from 2003 and going forward. You could see they ticked up in 2005 and went up along that curve as things got bad. And then starting when laws changed and things got more strict, you could see that these have gone way down as well. We had a little uptick earlier this year, but that's already leveled off, and we're still at basically decades lows on new foreclosures and bankruptcies. And so again, another indication that overall homeowners that are current homeowners compared to back then, 2005, 2006, are just in much better shape. They're better borrowers. They're better control of their finances. One number I saw in 2007, the average, or 2008, the average amount of equity a homeowner had in the United States was 19%. Today, that number is at 58%. That's a huge difference. And again, indication that people have all this equity. They're not going to go underwater anytime soon. They have options if things get bad. All positive things for the housing market. Another, like we talked about before, it's just a different time. 2007, there was about 4 million homes available nationwide. Right now, we're about 1.22 million. Big difference. So not as much supply. And then 2007, builders, kept building. Builders didn't learn, they hadn't learned a lesson yet. This time around, builders seem to have learned a lesson. Year over year, single-family home starts is down 22%, and permits pulled is down 21%. So that shows that builders are backing off. Builders are being more conservative. They don't want to build a bunch of homes that people don't want to buy or can't afford. So just by that, them making that change and not continuing to push forward and building as many homes as they can, that's going to keep the supply down and keep 2008, 2009 from repeating itself. So, like I said, with all that positive momentum going with rates, we hope it continues. Tomorrow, we're getting the BLS jobs report. Depending on how that goes, that could have a negative or positive effect on the markets. But overall, as inflation comes down, we should see these rates start to drop. not only have rates started to drop, but when we have options, we have, you can buy down the rate permanently. You can do a 2-1 temporary buy down. You could do a adjustable rate mortgage or something along those lines. And so as these rates come down, those options get better as well. So, a 6.25 with a 2-1 buy down, that's a 4.25, then a 5.25, and then to the high rate at 6.25. So, like I said, it is becoming a better and better time to be a buyer right now. We're seeing a lot of seller credit, seller concessions, which obviously plays into their favor. So, all seems to be heading in the right direction, and we can cross our fingers and knock on wood and hope that continues. So if anybody needs anything at all, if you have any questions about this or anything else, please do not hesitate to reach out, and I'd be more than happy to help you. Have a great week, guys.